Welcome investors, and thanks for joining us for the forecast where we decipher the market so you can be in the driver's seat of your investments. I'm Jake Ackerman. A pullback in the market down nearly 1% for the week as of today. Energy prices significantly rise about 8% as of today, and rates slightly tick up. Jobs numbers has a big blowout. So why is all this taking place? Let's touch base on the stock market. Stock market had about an 8% rally in January. Folks, stocks do not go up in a straight line. The trend has changed really into a more bullish favor, upward favor since October. But an 8% rally in January is a significant rally, and it doesn't go straight up. So there's an expectation at some point we're going to have a pullback followed by a continuation of the new trend unless things truly change. And energy prices have really ticked up this month. But let's take a look back in the future over a one-year time frame. Energy prices have come down over 15%, and that's including this rise. So nothing really goes up in a straight line. Rates peaked in, looks like as of June, have been slowly trending down and have a little bit of rising back up. Let's touch base on the jobs number though, and that's been all over the news, extremely higher than expected, nearly more than doubled what was expected. Given that, the Fed has talked about jobs. They want to slow down the job market, but what do they really want to do? Do they want to slow down the job market and crush the American citizens? Do they want to crush the people that are providing services to our economy? Not necessarily. They're more concerned about the wages increase. If wage increase significantly more than inflation, inflation's going to follow that wage increase. And that's what causes the problem. The wage increase didn't happen. It's flat. It's the same month over month, and it has been nearly for all of 2022. So that's aligned. Even though we had higher than expected jobs numbers, it could just be a one-off. We'll see what the next one brings. And that jobs numbers, there's a possibility that the Fed already knew that was coming. They say they're not privy to that information, but is that 100% factual? I don't really know. I know they are privy to some information before those are released, and they have to get indications. I mean, they have all the inside information to be able to make those estimates. And did that really change the dynamics of where their expected monetary policy is going to go? I don't think so, long as that average hourly earnings increase kind of stays flat. I mean, we want a strong economy. We're combating inflation. We need the strong economy. We need earnings to hold up. We need consumers to keep spending. We need people to go to the grocery stores and be able to afford food. And the way that latter happens is the Fed had tight monetary policy, and we need the economy to withstand that. And right now, it looks as it's doing so. Now, is that going to happen in 2024, 2025? That's something we'll touch base on later. Later in the year, we'll see how things play out. Right now, we're going to maintain our short-term guidance and be flexible with the incoming data and flexible with incoming obstacles, maybe some geopolitical things. But right now, things are looking much better. The bull trend has started. We talked about last week, we were looking at pullbacks as a buying opportunity. Our thesis is going to continue that way. Are we buying right this very second? Not necessarily. We're going to slowly make our entrances as the market comes down. Is the market likely to pull back further? Real high possibility. We had a significant rally. A little bit bigger pullback is just fine. So, and in sentiment, it went to extreme greed with the shift with that rally in January. So unfortunately, the people that buy late and wait and buy at the top, they don't get rewarded for that. The patient get rewarded. The people that realize the dynamics are changing and get rewarded. The people that stick with long-term investment goals and stick through their same plan that they're going to do get rewarded. The people that come in late, they get pies in the face, unfortunately. So let's talk about what's going to happen next week to figure out how we can play this and we need to highlight Tuesday, CPI inflation is going to be released. CPI numbers, we all know, we've been talking about it. Extremely important. That's telling us what the inflation, the CPI number is for January. Is it going to be above, below expectations? Remember how I said things don't go down or up in a straight line? Inflation has been coming down since the fourth quarter of last year up until now. Does January play out as continue the decline? Very high possibility. Would I be absolutely shocked if we had a little bit above expectations? Not really. I mean, it's not going to come. It may not. It most likely just won't come straight down. It's going to have a little, ebbs and flows, peaks and troughs, things like that on the way down. And so that's on Tuesday. That's a very important data piece. Thursday, initial jobless claims. Let's see how many people we've heard. Goldman Sachs, big tech, laying off employees. The high flyers, I guess you could say, the speculative companies that are, the new revolutionary technology, they've been laying off employees. Now, does it really translate to the jobs market? It hasn't been seen yet, but I would imagine it's going to come at some point, which is just another confirmation that the Fed is doing what they set out to do. Another point on Thursday is the Producer Price Index, PPI data, and that is also another inflationary metric. Producers, they set the prices, and the consumers got to pay those hikes. If they do hike them, or they just maintain their prices, and it's not going to be translated to the consumer. So we'll check back in after those very important data pieces are released, and we'll see where the market's going. And we're looking for buying opportunities. So, stick with us, and we'll navigate whatever 2023 brings us. Thanks for joining us. Expertise you deserve, experience you can count on.